From Washington, D.C., this is Middle East Focus.
Welcome to Middle East Focus. I'm Alistair Taylor, MEI's editorial director. Today I'm going to be talking to Jean-François Seznec and Summer Mosis about the Saudi economy, Vision 2030, and their new book, The Financial Markets of the Arab Gulf, Power, Politics, and Money. Jean-François is a scholar at MEI and a non-resident senior fellow in the Global Energy Center for the Atlantic Council. He's also an adjunct professor at the McDonough School of Business at Georgetown University and at Johns Hopkins School of Advanced International Studies. Summer is a senior analyst with S&P Global Platts Analytics, leading the company's analysis of European, Middle Eastern, and African liquefied natural gas markets. Jean-François, Summer, thank you for joining us today.
Thanks for having us.
Thank you.
Jean-François, while your book is about the Gulf as a whole, I wanted to focus today's conversation on Saudi Arabia, which is the region's largest economy and home to its largest exchange, the Tadawul. For listeners that might not be as familiar, can you tell us a little bit about Saudi Arabia's financial markets and regulatory system? What's distinctive about them, and how do they compare to other emerging markets?
Well, the Saudi market has traditionally been very conservative, with a very strong central bank called the Saudi Arabian Monetary Agency, who has been very eager to make sure that the banks would not speculate too much and basically orient their money and their investments in industry. They also wanted to make sure that the population of Saudi Arabia would be interested in the industrial development of the kingdom so that in the long term, the kingdom would not be so dependent on oil. So a number of years ago, Samad decided to help create a stock exchange, and now they let it be on its own. It's independent. But because of this, they made sure that the large Saudi companies, especially those with state ownership, would sell shares to the public. So you have very large companies. SABIC, the chemical company of Saudi Arabia, has 30% of its shares on the stock market. It's the largest shares sold on the stock market. So the population likes that because they see this as a state risk, but still getting dividends as if it was a private company. It's very highly regulated, and they're not floating hundreds and thousands of companies every day. The state keeps a very keen eye on it. It is growing rapidly, and since the population likes to invest in that, it's a market today that has $550 billion in capitalization, which is nothing compared to New York, but which is quite large for a relatively small country. That works very well, really, in that sense, and it will continue to develop as the private sector becomes more and more important, and some of the Saudi companies, Saudi state-owned companies, get diversified and sold out to the public.
Summer, switching over to you, as you see it, what are the main challenges facing Saudi markets at present?
That's a great question. It's something that we touch on in the book quite at length. And it kind of boils down to this key theme that what has worked in the past to drive forward industrialization and economic growth now hinders that same growth. When we look at industrialization in the kingdom, what we have seen is it's overwhelmingly state-led by banks that make loans at state direction. While it's not a policy written by the government, it effectively works where the main shareholders in these banks are government institutions who prioritize lending to state-run industrialized projects. And that has been great historically. It's allowed for the growth of key sectors in the Saudi economy. But the trajectory moving forward, at least the one that the reforms have set out and the one that's necessary for real Western-style development, is one that is more market-driven and the one that allows for the free flow of foreign capital to come in and that can actually attract that foreign capital. And the historical reliance on the state in this equation just doesn't fit. So in that regard, the biggest challenge is finding a way where the state is comfortable allowing this capital to come in while also being able to attract this capital and at the same time loosening the pressure or the grasp of the state in these major financial institutions. And thus far, as we've laid out in the text and our research shows, this hasn't necessarily happened. The PIF, the Public Investment Fund, the Sovereign Wealth Fund of the country of Saudi Arabia, has a majority share in most of the large banks in the kingdom. And that kind of grip on finance is kind of at odds with the long-term goals of the kingdom.
Jean-François, Saudi is now included in a couple of the global indexes, most prominently the MSCI, but several others as well. What impact has that had on the markets?
At this point, not much, but I think they're expecting that it will allow maybe $30–40 billion of funds to flow into the market, just like very large firms in New York and London who puts X percent of their assets in various markets. And through the diversification, yes, that's what they're hoping to get, 30 to 40 billion. So it is not an enormous amount considering the needs, but it's about 8% of the local market as of today. It will become very important when there are shares into the big companies that are being privatized or that may be privatized in the near future. At that point, there will be a lot more money coming in.
One of the things we want to remember in that regard, and the professor's correct, in the grand scheme of things, it's not a huge amount of money. I'll take $30 billion. That's a lot of money. But in the grand scheme of a country's economy, it's not that much. What we do not want to neglect, though, is that the road to inclusion was a long and hard one for the Tadawul and the CMA, the Capital Markets Authority of the kingdom. Oftentimes you talk about some of the obstacles, but this is a place where they've made some really hard reforms. They've modernized the capital markets, and they've really allowed for that inclusion into these global indices. So that's a success story in many regards. Mm-hmm.
Summer, I wanted to ask, it's been reported recently that Saudi Aramco, the national oil company of the kingdom, is set to issue its first international bonds in Q2 of this year, likely worth around $10 or $11 billion. Right. What's your sense of how that issue will be received, and what would the proceeds be used for?
We've actually talked about this, over a meal the other day, the professor and I. And $10 and $11 billion, while some have conjectured that this is going to go towards the purchase of SABIC, in reality, this is to cover capex for the company, right? And this is just to keep operations humming along. In reality, a company like Saudi Aramco has the breadth to go to markets for these kind of capital, and the markets will embrace it happily, right? And all signs thus far have been that this is what will happen. And in that regards, I think it shouldn't be looked at as more than another financing mechanism for a global oil major, which is what Saudi Aramco is. It's a global oil major, and it's moving firmly in that direction to diversify downstream and to become like a Total, like a BP, and that's just how we should look at it.
Yes, definitely. And I think it is very much part of a policy, a new wave, if you like, for Saudi Aramco. They've really decided to become what we would call an international oil company. They really want to be ExxonMobil on steroid. And in order to do that, they have to go international. And they know that. They already have a number of refineries in many places, but they want to go not only in those refineries, they want to expand this to even 10 million barrels a day total. And they want to go downstream from that in making chemicals, advanced chemicals, and so on. And they may even acquire some very big assets in the world, perhaps in this country, probably in Russia. And that requires a lot of money. Beyond the issue of Saudi Aramco taking over the chemical company, as has been suggested. So I think the 10 or 11 and a half, I think we're at now for this bond issue, I think will be just for that kind of issues, not so much to take over the SABIC investment.
And remember, currently where we are in the global credit cycle, this is the best time to go to the markets. I mean, this rate environment is not going to last for a long time. And that is not financial investing advice. That is just, how things are right now. But you will see a lot of companies taking the same kind of action. And we've seen it across the broader Gulf, really. So I don't think it should be looked at as more than those things.
I wanted to ask more broadly at this point, what's the perception of investors of the kind of country risk involved in investing in Saudi Arabia? How much of an impact in particular have the Khashoggi case and the anti-corruption drive had on demand among investors for Saudi assets?
Definitely, it has an impact. The war in Yemen has an impact because it makes people nervous about investing, say, in the south, in Jizan, where the big new refinery is. The Chinese company were pushed by the Saudis to come and invest, and they didn't because they were afraid of the war. The Khashoggi affair has been a major problem for large U.S. corporations in particular, because the corporations themselves do not want to be criticized by their shareholders for investing in Saudi Arabia, even though many would like to invest in Saudi Arabia. So it's really slowing down the decision process. There's no doubt about that. Perhaps in the long run, if they address the issue, and I think they are beginning to think, I think the political leadership knows that they have to address the issues, then the big corporations will start going back to invest. But at this point, everybody's not hurrying very much. Everybody's big plans, but slow.
Jean-François, one of the common threads in any discussion of the Saudi economy, of the capital markets, and of Vision 2030 is, of course, the issue of the potential Saudi Aramco IPO. Not the bond issue, the IPO. Reports suggest it's been pushed back, potentially to 2021. What's the latest that you're hearing about that?
Well, just that. We were at the conference with the Atlantic Council in Abu Dhabi in January, where the Minister of Oil and Energy, Khaled Al-Faria, came, and he actually said, we will do the IPO. It will be in 2021, probably. But I think we're faced here with a situation where within the Saudi leadership, they're not quite sure how it's going to be structured. I mean, Saudi Aramco has taken a lot of steps to be able to do that because Saudi Aramco was just an organization. It didn't really have shares or anything to sell. So now they've made it into a corporation. They can actually sell shares. I think we are told that the shares are now owned by the Ministry of Energy. So some of the shares will have to be given to the Public Investment Fund so the Public Investment Fund can sell the shares and get its $100 billion, which they're looking for. But the key of this IPO was really to establish not so much the money, which I think is a side issue in many ways, but to establish transparency. A lot of the leadership in Saudi Arabia, especially in the Ministry of Energy, wants to make sure that Saudi Aramco is a transparent company. They want people in Saudi Arabia to know that their asset, the people's asset, is transparent, and that cannot be used by this group or that group to their own benefit, and that it is like a regular international oil company. So that's why, again, they're pushing very hard right now to become this new international oil company so that they can be compared to the others. There's a twist to that in the sense that they really want to be seen as the ExxonMobil on steroid I mentioned earlier, because that's how you compute the value of a company. You compute the value of the company on the multiple of earnings. If you can compare the multiple of earnings of Saudi Aramco to the multiple of earnings of ExxonMobil, you get a certain value. And that value is $2 trillion today. And we discussed that in the book, actually.
Quite at length.
My next question was to ask you about that valuation.
Yeah, I mean, I think that's something that we go into at length in the book, because I think a lot of times when we look at analysis of the IPO, it is caught on this big number and not caught on...
It's a very big number.
It's a very big number. And there's no disputing that. But I think what's important is what the professor has rightly outlined is about what's the intention behind the IPO, and then looking at how that number can be calculated. And what we do in the book, and it's quite a good book, we talk about how it is that oil and gas companies are valued, what kind of multiples are used, and the difference in multiples for global, fully integrated companies and national oil companies. And when you look at that difference is how you can get to a number like 1.8 or $2.1 trillion in valuation. And Professor, as we were saying in the book, there were some really big important numbers that were leaked, quote unquote, by Aramco, right? And those brought about the valuation.
That's right, because they gave the figures for the first 6 months of 2017, which nobody had ever done. But going from that and then taking the price of oil for the second half of 2017 and 2018, you could sort of very relatively easily evaluate what is the profitability of Saudi Aramco. Then, given that we know they have announced, which they had not done in the past until now, they said that the state gets 50% tax.
The tax scheme.
They get 20% royalty first upfront on the amount sold, and then they get 50% on the net profits of the company. So, knowing that, we could figure out what is the cash flow of the company, basically, and we multiply by the ExxonMobil multiple or something like that.
Correct. So, we took actually historical figures based on multiples that we've seen in real life, and we took the data on production in real life from Aramco through Jody, and we did some analysis, which is all included in the purchase price of the book. It provides you with that valuation. And
we have to increase the price.
I think we should. Yeah, $2 trillion? Is that good for you?
Yeah, that'll do it.
What would the proceeds be used for? And considering the fact that Saudi Aramco's got a business where they're taking oil out of the ground at $5 and selling it for 60, 70, whatever dollars a barrel, is there any way they're going to get anything similar to that kind of return on investment with whatever they do with the proceeds?
Well, Saudi Aramco is not going to get the proceeds. You see, the proceeds are going to go, supposedly anyway, to the Public Investment Fund, who in turn will invest that in high-tech companies worldwide. The idea being to invest in Uber and Tesla and so on and bring technology back to Saudi Arabia so that the country can develop in other things than just oil-based industries. So that, I think, is the view. Now, they'll never make, the $5 to $60 or $70. That's a good business model, And in fact, they probably will lose money as they are now. The Public Investment Fund probably loses money today on these foreign investments they're having. We'll see how that develops. But no, Saudi Aramco will also have a declining, probably, net return on assets, because if they start investing overseas, like by buying assets in the United States or in Russia, they will not get that kind of return on their money. But it will deepen their knowledge of the markets. It will deepen their overall ability to control their own destiny.
As well as diversify risk. I mean, and that's the key here. And I think we have to remember that the effort is not just to make money, but to make money in all occasions and in all the weather. And in that regard, you take this capital out of Saudi Aramco and you invest it broadly, just like any kind of diversified portfolio. And you should, over a longer time horizon, see the cash flow that you want, right? Even if oil does peak.
Switching gears slightly from financial markets to the kind of economy more broadly, it's been about 3 years now since the government first announced its long-term economic development plan, Vision 2030. How has that fared so far?
I think by and large, it has achieved a lot, especially not so much in the actual facts of things, but more in the atmosphere. I mean, one thing that has changed, for instance, and was very important in Vision 2030 is the role of women in the workforce. Mm-hmm. And that in the last 3 years has really just been night and day. And of course, we all heard about the right of women to drive and so on, which is important, not so much for what it means. Most women still don't drive, but for what it implies. And that's the freedom of looking for jobs and working away. Now, they have also modernized a lot of the technocratic structure. And that was one of the main factors of Vision 2030, is to reform the whole bureaucracy to be more efficient. It's very hard to reform bureaucracies, as we all know, and it's not always working very well. But they've been trying really hard in that sense. What has not really happened yet is I don't think the private sector has followed suit. Mm-hmm. And that's probably for major political reasons. We'll see how that goes, but that still has to happen, I think.
Yeah, absolutely. And I think what we do start to see is this change in tone brings about some change in action. But this is Vision 2030, which was, given with a 22, 23-year time horizon or 15-year time horizon. Even that was hoping for a lot, right? So 3 years in, I don't think it's a surprise to anybody that the goalposts have changed. What is realistic and what is desired, that has become more nuanced. And in that regard, there has been a refining of what the objectives are. But the tempo is not as fast as everybody wanted to begin with, but I think it's a realistic one. And it's very important to see how people's discussion around the Saudi Arabian economy has changed.
Yes, absolutely. And I think one of the key, of course, is that what happened in Saudi Arabia in the last 3-4 years is that the youth has taken over. And 70% of the population is below the age of 30, and they've taken over. We all know that youth makes mistakes sometimes. Never. That's true. Right. Yes. But it has changed a lot. And you can see in the ministries, the old folks are gone, basically replaced by much younger persons, men and women, and they're learning on the job as well. So I think altogether there's a lot of positive view in Saudi Arabia of Vision 2030. Everybody would like it to move a lot faster, for sure, but it's very difficult.
Summer, also on Vision 2030, one of the overarching aims is the reduction of reliance on hydrocarbons writ large. But at the same time, the energy minister recently announced that Saudi Aramco plans to expand into not just the downstream, but international energy exploration and production. Are these two goals kind of at odds with one another, or can they achieve both?
I think the idea of downstream and upstream diversification is something that is not fully delved out in shorter statements like that. When you start looking at downstream diversification, you're really looking at there's a broad array of products outside of oil and outside of crude that originate from that same barrel. And moving into those sectors may not be pure diversification. It is still diversification nonetheless, because you're going from a country that just produces oil and exports it, for example, Libya, to a country that exports the oil to a refinery it owns, overseas with its own feedstock, making other higher value products, selling those higher value products to make plastics, to make car parts, to make things of that nature. And in that regard, you are going very far away from that oil field and you are diversifying. Is it pure diversification? No. And I think that critique is a fair one. That does not mean that it's not a lowering of the risk that comes with being a pure upstream producer. It's a huge change.
Yes, absolutely. And they've tried to develop other industries. Obviously, they're pushing very hard for entertainment. It's a big word in Saudi Arabia. They've, started movie theaters, and they're actually funding movie makers. And they are also trying very hard to develop a military hardware industries and so on. But ultimately, this is all good, and it all brings money to the kingdom and value added. But the core of the success will be in the very downstream, and it will be making very precise, very technical, difficult chemicals out of what is originally a carbon molecule coming from a barrel of oil. But that carbon molecule, by the time it gets to the end of the chain, will be worth 15 times what it was worth when they got it out of the ground.
I mean, and frankly, for a oil and gas company to see this opportunity and not take it would be imprudent, right? So in that regards, I mean, this is the direction they should be going in. But what it needs to be paired with is direction in other areas economic. I don't think like the original question was, are they mutually exclusive? No, they're not. But there needs to be more in other areas. And as the professor mentioned, there is some of that. Should there be more? Absolutely. But they have to coexist.
Necessary, but not sufficient.
Yes, I think that's
right.
it, yeah.
That's right.
Finally, I wanted to ask about the Crown Prince's recent trip to Asia in late February when he visited India, Pakistan, and China and announced a number of major investments with significant price tags associated with them. To what extent does that reflect a kind of broader rebalancing that's taking place within the kingdom's economy of its ties towards Asia?
Very obviously does. And they've been pushing. It's not, the king himself, the father of Mohammed bin Salman, went to China not so long ago when he first became king, and there was a big hoopla. I mean, they had 3 airplanes full of people and so on, and they signed hundreds of agreements. They opened a special library at Peking University with the name of the king and so on. So they've been really trying to move away from just a U.S.-centric policy. They want to tell the U.S. that, the U.S. is not the only game in town, but they also know that in the long run, China in particular is very important because it has technology and it has a lot of people and they can work together. India is very important. They're putting a lot of pressure on their own companies to be involved in India. And of course, that's another balance between Pakistan and India. And the Saudis, I'm sure they know this extremely well and are trying to play both sides. But the whole notion is really that they want to not just be a one-trick pony. Mm-hmm. I mean, they want to diversify very much. China today is the largest buyer of Saudi oil. And that's a lot of money. And they also have refineries in China. They have downstream stuff. I think we'll see more and more of that. It is an economic reason, but also very much a political view, which is what you're hinting at, really.
I mean, it goes both ways, right? I mean, I think the short answer is yes, it is a turning point. But also, no, it's not. This has been a trend that we've seen for a long period of time. When you look at equity oil in the broader Middle East, if you look at all Chinese companies as one, all the state-owned companies as one, and you group them together, equity oil, the Chinese companies take the top 5 in equity oil production in the broader Middle East. That's a lot of financial interest, right? So this isn't a new thing where suddenly, oh, China's here, right? No, this has been going on for a long time. And if you look even further back and you look at the financial relationships, not just in hydrocarbons, but in finance writ large and capital flows, there was a turning point in the mid to late aughts where you started to see a lot of Gulf capital now being invested in Asian and Southeast Asian countries from the sovereign wealth funds in the region. And this is kind of a reaction to the reception or the lack thereof, positive reception-wise, in the West of a lot of these capital flows. So I think there's a recognition in the Gulf that there is this other market. This other market's very important, and we need to be a part of this market. And the best way to do so is to get our hands in there. And it's telltale that there's been 2 massive trips by Saudi officials to Asia just in the time that this book started and finished. finished.
A nice coda to things then. We'll have to leave it there, but if you're interested in learning more, do pick up the book, The Financial Markets of the Arab Gulf. Jean-François, Samer, thank you both for joining us on today's program.
Thank you for having us.
Thank you.
And thank you as well to our audience for listening in and to our production team for their work on today's program. We will see you all next week.
This has been a presentation of the Middle East Institute. To support MEI's programs and podcasts, please donate at www.mei.edu. Thank you for your support.